Okay, merchant cash advance, business term loans, and lines of credit. Merchant cash advance is probably the highest rate product that you're going to find. It is the owner selling its portion of its future credit card receipts for cash now. And by it being structured as a purchase of future receipts, it's not covered by the usury laws in most states. So the interest rate is unregulated. So it is a dangerous product as well as a useful tool in developing your cash flow for your business. Now, in the last 3 to 5 years, there's a lot of companies that have got into the merchant cash advance space, and that has brought the interest rate prices down for the fees that are charged. But still, it is it's the highest rate interest rate product that you can get. What generally it entails is you have on a daily basis or a weekly basis, usually it's daily, they get a portion of your credit card receipts. It might be usually between 15 and 35% of whatever your credit card generate for that day until your agreement is satisfied. Say, for example, you borrowed $20,000 for 8 months or 6 months and you had to pay $25,000 back. So what they would do is take 15, 20, 30% of your of your credit card receipts until your loan is satisfied. Now, generally they have a relationship with your merchant for your credit card business. Now, total cash advance is where it is automatically taken from your bank account, where it is not just your credit and debit card sales, it's your total sales for the day. Now, unsecured lines of credit. Generally, unsecured lines of credit are, well, you have secured and unsecured. Secured lines of credit have some type of collateral involved. Unsecured lines of credit is just that, unsecured lines of credit. So generally, it requires a higher credit score for your company and or the principals behind the company, generally whoever is 20% or more interest in the business. Now, the lines of credit is similar to your credit cards. You use so much, you pay interest on the amount you use, and or, the amount is adjusted according to just how much usage you have. Whereas with a bank term loan or with a bank term loan or merchant or total cash advance, you just get a lump sum and then your interest or your fee is based on whatever that principal amount is. Now with unsecured lines of credit, generally they're good for seasonal changes in sales. They're good for inventory replenishment or increases, marketing, hiring new employees. A good point about that is there's no closing costs. Usually the rate varies according to how much you take out. For example, say your unsecured line of credit is $100,000. If you only use $30,000, then your rate or fee is going to be higher than if you used $80,000. So you'll pay more with the $80,000, but it'll be a smaller percentage of a larger amount. Our motto is, if we can't get it for you, you can't get it. About 6 or 8 months ago, I had 6 people come to me who were interested in unsecured lines of credit who had all been turned down multiple times. I was able to get 5 of them approved for funding. If we can't get it for you, you can't get it.